Picture this: a 175-year-old company suddenly becoming one of the central players in the AI revolution. A company that invented the scratch-resistant glass on your iPhone, but today is literally building the data highways that power ChatGPT and the world's most advanced AI models. This week, this company's stock exploded over 16% in a single day, driven by a historic strategic deal. Investors who've been following this story closely have seen their capital double in less than 12 months, though of course past performance doesn't guarantee future results. We're going to dive into the fascinating story of Corning Incorporated, understand why this century-old company now dominates a cutting-edge tech sector, and analyze whether this trend has long-term staying power. Before we get started, a critical reminder: this content is strictly educational. This is not financial advice. Do your own research based on your personal situation and risk tolerance. If you appreciate this kind of in-depth analysis on under-the-radar companies, don't forget to like this video and subscribe to the channel. Now, let's dive in. Corning Incorporated trades under the ticker GLW on the New York Stock Exchange. On January 27, 2026, the stock closed at $109.88, marking a spectacular surge that surprised even Wall Street's most bullish analysts. Based in Corning, New York, this company operates in an unglamorous but absolutely critical sector for the modern digital economy. Corning is one of the world's leading players in materials science, specializing in fiber optics and high-performance specialty glass. Corning's strategic positioning is unique. The company doesn't just make ordinary glass. It creates material innovations that enable data transmission at the speed of light. Its flagship product, Gorilla Glass, equips Apple smartphones and generates billions in annual revenue. But it's in the invisible infrastructure where Corning really shines. The data centers powering artificial intelligence require astronomical amounts of fiber optic cable to connect tens of thousands of graphics processors working in perfect synchronization. The numbers speak for themselves. Over 12 months, Corning stock has jumped 114%, vastly outperforming the S&P 500, which only gained 15% over the same period. Since the start of 2026, the stock is already up 21%, while the benchmark US index has only gained 1%. This massive outperformance reflects a fundamental shift in how the market perceives Corning. Once viewed as a mature materials company, Corning is now positioned as an essential player in AI infrastructure. The company's market capitalization now stands at approximately $94 billion, making Corning one of the largest American companies in its field. Revenue for 2025 came in at $16.41 billion, up 13% year over year. This revenue acceleration is directly tied to exploding demand for optical solutions for AI data centers. Corning's technology solves a fundamental problem in the AI era. Modern data centers consume massive amounts of electricity to run thousands of graphics processors simultaneously. Transmitting data through traditional copper cables generates excessive heat and consumes between 5 and 20 times more energy than fiber optics. Corning has developed photon-based transmission technology, where data travels as light pulses through ultra-pure glass fibers, each thinner than a human hair. The company has even created a new product category specifically for artificial intelligence. The contour cable, whose patent bears CEO Wendell Week's name, represents a major innovation. This new cable allows twice as many fiber strands to pass through a standard-sized conduit and reduces 16 traditional connectors down to a single simplified connector. This densification is essential because AI data centers require massive connections between servers to create what Weeks describes as a separate network trying to replicate the connections between neurons in your brain. On January 27, 2026, Corning and Meta Platforms announced an unprecedented strategic partnership. Meta is committing to purchase up to $6 billion worth of Corning products over several years to equip its AI data centers in the United States. This deal transforms Corning's financial trajectory. According to Wolf Research, this contract could double Corning's annual revenue from Meta, jumping from less than $500 million to nearly $1 billion per year once the facility is fully operational. Meta plans to build 30 data centers, 26 of them in the US, and has committed to spending $600 billion by 2028 on this infrastructure. The Prometheus data center in Ohio alone, with 1 gigawatt of capacity, will require 8 million kilometers of fiber optic cable. To meet this massive demand, Corning is significantly expanding its production capacity in North Carolina. The optical cable plant in Hickory, where Meta will serve as an anchor customer, will become the world's largest facility of its kind once construction is complete. The Meta deal is triggering major manufacturing expansion. Corning plans to increase its North Carolina workforce by 15 to 20%, maintaining a skilled labor force of over 5,000 employees in the state. This job growth reflects surging demand not just from Meta, but from all major American hyperscalers. NVIDIA, OpenAI, Google, Amazon, and Microsoft all count among Corning's major customers for their AI infrastructure. Fourth quarter 2025 results, released January 28, 2026, beat expectations and confirm this exceptional momentum. Corning reported revenue of $4.41 billion, up 14% year-over-year, and earnings per share of 72 cents, up an impressive 26%. The optical communications segment particularly stood out with explosive 58% growth in enterprise sales, driven by massive adoption of Corning's new generative AI products. For the full year 2025, Corning generated $16.41 billion in revenue, up 13%, and earnings per share of $2.52, up a remarkable 29%. Following the exceptional 2025 results, management raised its Springboard strategic plan. The internal plan now targets adding $11 billion in annualized sales by the end of 2028 versus $8 billion originally planned. Even more impressive, the high-confidence plan now targets $5.75 billion in incremental sales by the end of 2026 versus $4 billion previously. This upward revision reflects strong visibility into future demand. The spectacular stock performance naturally raises valuation questions. At $110 per share, Corning trades at a price-to-earnings ratio of roughly 44 times, based on adjusted earnings of $2.52 per share for the full year 2025. Looking at analyst forecasts for 2026 with estimated earnings around $3 per share, the forward PE ratio sits around 36 times. This valuation deserves context. Over the past 13 years, Corning's median PE ratio has been just 18 times adjusted earnings. The current multiple of 36 times clearly exceeds the normal historical range. Compared to the tech sector, which trades at an average of 32 times earnings, Corning carries a noticeable premium. Following the Meta deal announcement, analysts at Wolfe Research raised their price target to $130, anticipating faster-than-expected revenue growth through 2027. The company also pays a dividend with a yield of approximately 1.02%, a sign of a mature company rewarding shareholders while reinvesting heavily in growth. Despite the positive momentum, several factors deserve careful attention. Current valuation reflects very high growth expectations that are now largely priced into the stock. The shares have doubled in 12 months, and some analysts believe the stock has become expensive after this spectacular run. Dependence on tech giants' infrastructure budgets represents a structural risk. If Meta, Google, Amazon, or Microsoft scaled back their AI data center investments, it could significantly impact Corning's growth. Corning Incorporated perfectly illustrates how a century-old company can reinvent itself and become a central player in a major technological revolution. The historic Meta deal, massive manufacturing expansion in North Carolina, and dominant position in the fiber optics market for AI data centers position Corning as a direct beneficiary of the artificial intelligence boom. The exceptional stock performance of 114% over 12 months reflects the market's recognition of this strategic transformation. For investors, the key question remains valuation after this spectacular run. The forward multiple of 36 times earnings reflects high growth expectations that will need to be confirmed by future results. If you'd like to dig deeper into this analysis, feel free to leave a comment with your questions. Don't forget to subscribe to our channel so you don't miss any of our analyses on innovative companies. And remember, this video is strictly educational and does not constitute financial advice in any way. Always do your own research before making any investment decisions.